know what I'm saying? And we had other people on the team, you know, using this strategy. So to see that, you know, that's great to hear and great to know, because, you know, that let me know that we moving up in the hold on, I got y'all. Yeah, it's recording. That let me know that we moving up in the trading world, right? So so if y'all been hopping on trade calls for the last couple of weeks, y'all been hopping on my calls, then y'all know already off the back that we trade smart money concepts, right? What is smart money concepts? That's a strategy that we use that you can find on Go Live, right? We call it trading with the banks, right? So you can go to Go Live and go to the Forex Advanced session. When you go to the Forex Advanced session, you're going to search Zachary Hogan and Jordan Morgan, or you can scroll down however you want to get to it. And those are the guys that teach us this strategy. They have multiple educators within their team, but those are the two main guys that I know specifically myself that I've learned from, right? So what they did was they put together a course, right? Pretty much a course teaching you how to learn this strategy from top to bottom, from the most simplest way to the most complex, right? But you got to have an active Go Live subscription, which we all should have for you to access the course. So where you can find that at is at www.howdoitrade.com/course. And you're going to see they're going to have each video is broken off into sections, right? And it's going to teach you, like I said, from the beginning to the most complex way, right? So where you can find me at is on Instagram at CoachRateNC. Like once we hop off the call, if you got any questions, you may be on trade team, Malik personal team, you know, whoever it may be. You can hit me up on Instagram. I'm always down to help anybody, you know, do calls, you know, so that's pretty much where, you know, you can get all that information at. Let me check the chat real quick. Right. Appreciate it, Malik. All right, so just, you know, I'm gonna go over some of the simple forms, like some of the most basic things that you need to know before you even get into this strategy, like actually on the charts with it. I'm not gonna go too deep into the basics. Like I said, you can find all of that on the course. I'm not sure what Trey gonna go over, right? But first of all, type of 111 in the chat. If you ever put in a trade, you saw the pattern and you just knew exactly what was gonna happen, and then your trade hit stop loss. Type of 111 in the chat. Right, that was all of us. Should be all of us, right? And it's a reason for that, right? So what we had to do was find out why that reason was. Like we had to get on the other side of that. So what we had to understand once we did more research and things like that, we found out that we aren't the only traders in the Forex market. Like us regular people, we're not the only traders. Of course, it's people with more money, but also if you do the research, you can go on Google right now, you can type it in and search it and ask, you know, who are the top Forex traders in the world, and 9 out of 10, your bank gonna pop up. 9 out of 10, your bank gonna pop up, right? So this time I want y'all to type a 333 in the chat. If you ever put some money in your bank and you know you just put the money in your bank and it said pending, but you know you clearly just put the money in your bank, type a 333. So what we gotta start doing, family, is we gotta start questioning some of that, right? If I know for a fact everything's digital now. If I just put this money into my bank, it should automatically be in my account. Why does it say pending? Why? Because the banks are trading your money, right? The money that you spend in your bank is never actually yours. Actually, it's somebody else's, because when you put your money in the bank, they take your money, trade with it, and then give you somebody else's money for the time being, right? So like I said, you can do the research on all this. A lot of banks get sued for this, market manipulation, all those type of things, right? So, right, like Ryan said, they trading your money, right? So what we got to do is not trade against them, because you got to think about it. They got more money. You're going to lose every single time. We got to get on the same side that they're on, right? So these two diagrams that I have right here, I want y'all guys, y'all can write it down, screenshot it, whatever y'all need to do. You need to plant this in your mind, right? Because the faster that you can see this, the faster that you can become more profitable in the market. So like I always tell people, this one strategy, you know what I'm saying, it's not the only strategy in the world. Other people use other strategies and they're profitable. It's just a strategy that I use, that Trey used, that we found, you know, works best for us, right? So for me, the reason I like it is because I'm never really risking a lot of money to make a lot of money, right? Some people will tell you when you get in trade, oh, you need a lot of money to make a lot of money. No, that's not true, right? Those people, they just don't know how to trade, right? So like I said, we're going to get straight into the diagrams, right? So this right here, this structure right here, what do they teach you? What they tell you in the academy that this is, right? When it goes up, what they call it, it hits the roof and falls down. Somebody type it in the chat for me. What that's called? When they tell you, oh, it goes up to a certain area, it falls, hits the ceiling again, falls. What that area called? Check the chat. Resistance, right? Definitely resistance, right? And it's the same thing for the floor, right? That's why I have that drawn up like this. It's the same thing for the floor. Oh, it hits the floor. It has to bounce back up. So that's where they teach you to buy and sell that. We all know, I'm not saying that that's wrong. It's not wrong by a long shot, right? So one thing that I had to learn when I started learning this strategy, one of the most important quotes that I heard was trading and making money is the transfer of wealth from the impatient to the patient. So I had to learn to be more patient in the markets. I was one of those people, and like I say, that's not wrong. You can make money like that. But when I wanted to take my trading to another level, making large amounts of money, then I realized that that wasn't going to work for me, right? So every time I would see a double top, what they call it, an M or a double bottom, a W, triple top, triple bottom, they telling you to buy and sell right there. But every time that I would do that, I would be in profit for a little while. I would. But then I check my phone again, go to sleep all happy. Oh, I'm in profit. Wake up, I done lost money, right? How many of y'all that happened to? Should be all of us, right? So this diagram right here, this is the first one that we're going to look at. This is for the sell side, right? So what happens is we got to understand we are in the same market as the banks. Everything in this country is ran off of money. Every single thing, right? So the banks want to make money just like you want to make money, right? And they know to make money, to make more money, that they need to take your money so that they can add to their lot positions. Type of, let's type of 444 in the chat if you think a 1.0 lot size is large. If you think a 1.0 is a big lot size, type of 444 in the chat. I want to see if y'all really think that's a, large lot size, because it is. Okay, we got some people. They think that 1.0, that's standard. I think that's a large lot size. I'm gonna be honest with y'all. It's not. It's not at all. I'm just being, we think for us, a 1.0 is a large lot size, right? But for the banks, that's nothing. I'm gonna be honest with you. They using $1 trillion lot sizes. How? Because when you lose a trade, that's them taking your money and adding it to their lot size, like I just said. So that allows them to use those larger lot sizes so that they can make more money. They just got to fool you and take you out of the trade first, right? So whenever, just basically looking at, Euro USD, right? When you see these little small candles like this, that's us regular people taking trades and moving the market. But when you see these large candles like this, that's when you know that the banks are in the market, right? So that's how you know that they moving it. So you got to get on the same side as that, right? So what they'll do is they'll show you this, because they'll show you everything you want to see. Oh, let's make it look like a double top, a double bottom, and they'll make you sell and buy it. Then what'll happen? Price will shoot up. We call this right here, where I got this dollar sign, a pocket of money, right? We call this a pocket of money. Why? Because if you place a sell right here, what's going to be in this area? Your stop loss, right? So what they're going to do is move the market up, stop you out, add that money to their lot size to then do what? Move the market back down in the direction that they want to, right? So it's a couple of things that you need to look for, right? We call this for the sell side, we call it the last up candle before the down move, right? So what happens is when they push the market up, they never take profit, right? When they push it up and stop you out, they immediately slam it right back down. That's for when they're trying to catch sales, right? And what happens is those buys that they still in, they run in negative. So they just like us. They don't want to lose money. So what happens is when they push it down, they have to come back to the open of those candles, either the open or halfway, 50% of those candles to hit break even, right? So now that they at break even, they can continue pushing the market back down in the way that they wanted to, right? And it's the same thing on the buy side. They'll make it look just like you want to see it. A sell, they'll trap buyers down here. You put your stop loss down here, or you're in profit for a little while, then they'll slam the market down, right? Hit your stop loss. Tell me I never seen that before, right? Tell me I never seen that. So they'll slam the market down to then do what? Push it in the direction that they want to. But like I said, those sales that they were in, they still running negative, right? So they have to come back to the open or the 50% and break even so they can continue going in the direction that they want to so that they can make their money, right? So like I said, this right here is something else that you can screenshot or take a picture of too, because it's very, very important when trading this strategy. right? There's a couple questions that you need to ask yourself that I personally ask myself before I even take a trade, right? I ask myself, where's the money? What does that mean? Where are people's stop losses? Where are they trying to trap people at in the market so that they can take their money? Where's the money? That's why you see I have those dollar signs right here, because I know that people trying to buy. I know that people trying to sell, right? Are the banks in the market? How can we identify that the banks are in the market? We just talked about that. When you see those large candles very, very fast, that's when you know that they're in the market. So you might see an hour candle this big. That's not normal, right? That means that they're moving the market very, very fast, right? Where is my POI? What is a POI? My point of interest. We call that the snipe zone, right? That's what we call a snipe. The point of interest is the open of that candle and the 50% of it, whether it's on the buy side or the sell side. That last down or up candle, the open or the 50%. That's what your point of interest, or unless you plan off an imbalance, which we're going to get into in a few, right? Let me check the chat. Right. So that's going to be your point of interest. Wherever they're trying to come back to and break even. Look at it like that. Keep it simple. Is the time of day right? Now, this right here totally depends upon you, right? What kind of trader you are, what your trading plan is. For me, I don't trade throughout the day. That's just me personally. I found that works out for me, right? So if I see a trade setup that's out of my trading window, I'm not going to take it. That's just me. It might work. It might not, right? I'm just not going to take it. I'm just going to miss out on that one, right? I'm going to be more patient. It's going to be way more setups. So for me, I trade personally London session from like 2 to like 4 a.m., right? Or I trade New York, which is from like 7, 8 a.m. to I trade to about 10, 10:30, 11, right? So for me, what I found is during those specific times, the market moves the fastest, right? And think about it like this. This is what I found myself. Normal people, not us Forex traders, 2 to 4 a.m. or 8 to 10 a.m., what's going on? Let's start with the 2 to 4 a.m. What most people in the world are doing. Somebody type it in the chat for me. Let's see. Somebody said something. Sleep. Everybody sleep. So what are they doing? They moving the money while you sleep because they don't want you to get any of it, right? 8 to 10. What 8 to 10 a.m. What most people, well, everybody in the world is doing. 8 to 10 a.m. What everybody in the world doing? Going to work. Either going to work or at work. So you have no time to sit there and watch the market. So that's when they want to move the money, right? So everything is about the money. You got to understand that they do not want you to win. That's why 90% of traders, Forex traders, fail. Because think about it. These patterns, like the double top, the double bottom, and like I say, they teach you that in the academy, and that is definitely not wrong by any standard. You just got to be more patient with it, right? But why do you think they put all of that on Google? Like they got a website, you know, not my nephew Deuce, but they got a website called Baby Pips, right? And they put all of this same stuff on it. Why? For free. Now we all know nothing in the world worth having is free, right? They put it out there for you to see it and for you to learn it just so they could take your money, right? So like I said, the time of day for me, it has to be in between those two times for me to take the setup. If it happens outside of that window, I'll tell myself or tell my team, okay, you go ahead and delete the trade. What is my RR? This is most important for me and for what I teach my team. Like I said, everybody trade different. You could take some of your, habits and put into this trading strategy. You don't have to do it the same. But for me, the risk to reward is key. As is for me. Like once I started trading this strategy, I realized, man, I was risking way too much of my money from one trade. I was risking, half of my account just to get maybe half of that back. That's not smart. Honestly, just keep it real. You gambling with your money. And hell, if I want to gamble, I could just go to the casino. Like I don't like gambling with my money, right? So that's when I learned that I can risk little to make a lot. So for me personally, any trade that I send to my team personally, or that I look for myself, the risk to reward has to be a 1 to 3. Has to be a 1 to 3, right? At least. So 1 to 3, 1 to 4, I could lose that trade a couple times. And once I win it, that one time, I'm going to get all of my money back that I lost plus profit. You see what I'm saying? Now, if I risk $50 to make $50, I lose that $50 one time. Hell, I can't trade for a few days. right? And I you know what I'm saying, that don't sit well with me, right? So what is my risk to reward? Me personally, I'm not taking a trade that's just me. Like I said, there's no knock on anybody else. This is something that I teach my team personally. I'm personally not taking a trade risking over 50 pips, 40 pips. That's just me, right? To me, that's too much. You know what I'm saying? And plus with this strategy, you know, and I'm pretty sure Trey gonna go over that in a few, you can go down time frames to where you don't even have to risk half of it, right? So the thing about it is, make sure that your risk to reward is great. If me personally, if I'm gonna risk $50, just being honest with y'all, I better be able to potentially make about 400. Just being real. I better be able to make at least 350, 400 from that $50, right? So that's the checklist that I go through, right? So personally, now we're gonna get into some charts. Like I said, I'm gonna go over 2 quick pairs, real quick, and then I'm gonna go ahead and pass it on to Trey. Like I said, he's gonna go in some more detail. Let me go ahead and delete this. So now we're gonna get into some charts. We're gonna look at some details, right? So one thing that you gotta understand and realize, first of all, when you're taking a trade, you gotta understand high time frame, right? It's just not about, you know, at the moment. So you might find a setup on the 1 hour, might look like it's a sell and you holding, but that might just be a counter trend trade from the higher time frame and it's still bullish, right? So you got to understand where you are in the market, right? But me personally, just to give y'all, you know, a little tip of advice, when I first started, I specifically started practicing on finding the up or down candle. Sometimes it worked, sometimes it didn't. But that's how I specifically started, right? And then you can get more into the market structure or the higher time frame, you know. So higher time frame, we all should have that anyway. You know, that's taught in the academy, market structure, right? So just a setup that me personally that I was looking at throughout the week, I saw it, but I personally didn't even take it. So let's say, right? Let's say we looking at this right here. Let's say we at this point in the market, right? So tell me, please, if y'all can see it, what are you taught to do in the academy? You know, what you just taught to do in general. This is a strong zone right here, right? Strong zone, right? What are you taught to do right here? Somebody type it in the chat. Got a dollar sign. Sell, right? You taught to sell right here. Is that wrong? No, it's not wrong at all. But you got to be a little bit more patient sometimes, right? Because remember that diagram that we just looked at, right? If we look right here, what this starting to look like? You taught to buy down here. Look at this area. Oh, it's playing around this area. Can't break this level or however they call it. Let's buy it, right? Same thing. Let's see if y'all can start to see it. They teach you to sell, right? So your stop loss will be somewhere in this area. So sometimes it looks better than others. It might be a small fake out or it might be a large bank candle takeout, right? Either way, it's still an FU candle, right? We call it an FU candle because basically that's the bank saying, fuck you, give me your money, right? You're not even being funny, right? That's just what it's called. So look at what price did. Moved up. Look at your stop. Look at your stop. You already taken out the trade. You lost money, right? And like I say, me personally, the way I trade, my stop loss not about to be way up here. So I would be in the trade right here. I would have got stopped out. And me thinking, oh, I thought it was selling. It must be buying, right? Let's let it play. Being patient. So let me rewind it just a little bit. Let me get out of it. So to about right here is the point that you need to identify, right? So after you got stopped out of that trade, like I said, it's time and action. It is time and action, right? So if you look right here at the bottom, if y'all can see 22 May 20, 1 a.m. That's 1 a.m. London session, right? Remember, we just talked about how fast the market moved. So now you're getting that London push. Look at how fast these candles are falling. Like, this is not normal. So to me, this would have told me that the banks were in the market. So like I said, everything is not picture perfect, but at the end of the day, it did stop you out here and it did take you out here, right? So now, what do we have here? What do we call this? Somebody type it in the chat for me. What do we call this area? POI. POI, point of interest. Great, great, point of interest, right? So now it's an attempt, right? Just like any trade that you take. Nothing is promised, but it's a worthy, I tell my team, it is a worthy attempt. You know, they send markups sometimes, you know, Ray, what you think about this? What y'all think about this? To me, when you see you got highs taken out, price falls fast, banks are in the market, it's a worthy attempt. It might play out, it might not. But the thing about it is the risk to reward, right? So just looking at it, let's go into something next. One thing I forgot to put on the checklist, where are the targets, right? So the targets are where the trap money is. So they already took out the sellers, right? So who are they going after next? So now we're talking about TPs, right? Who are they going after next? The buyers. Look at that little support. Look at that little support right here. They going after the buyers next, right? So now you're talking about where your TPs could be. What am I risking, Ray? Okay. Just from using our ruler, we said we use the open of that candle and the 50%. That's normally is like a ratio. That's where it's gonna go, you know, to hit break even. If it goes past the body of this candle, or you can use the wick, whichever one you want to use. If it goes past either one of them, the trade is not valid, right? Or if it take out these lows or these lows and break structure before, you know, it comes back to retest and the trade is not valid, just delete it, right? So let's look at risk, right? Just from TP1, from the open of this candle, let's say I'm playing the wick, right? I'm looking at 20 pips to possibly get what? 50, 55 to TP2. 20 pips to get what? 90, 93. And if we just keep on going to the other ones, I'm pretty sure that's more than a 1 to 3, right? So let's see how it played out. Price came in, and I want y'all to notice something. Look at the structure. What did they teach you in the academy? Like I say, what you learn in the academy is not wrong. This is a change of direction. I think you call this a morning star or something like that. I don't trade that shit no more, but still. You got this doji right here. That's a sign of change of direction. But look at when it came to your point of interest, how long did it stay here? Not long at all. So you would have literally been in red, negative, hell, no telling how long, but it wouldn't have been very, very long at all. And look at how fast price is falling. Look, TP1 about to get smacked already, right? So let's zoom out. Let's see what happened. Boom, look at how it fall. Now you're just getting regular price action. This is healthy, right? It's called, if it's fast, it don't last. You see how this was falling real, real fast? And then look at the correction, right? Now you're getting healthy price action. Right, Leak. So now, let's see about TP2. TP2 smashed or close to smash. Let's keep it going. Let's zoom out some more. Price falling, TP3. These are worthy trade setups, right? It was worth the attempt. So we risked 20 pips, and that was from the wick. From the body, let's see what it looked like. We risked 20 pips to get 150, right? That is way more than a 1 to 3. I could lose that trade so many times and then win it once. Now we're looking at the opening to just the body. Now we're looking at about, I can't see it. From the opening to the close, we're looking at a 10, 12 pip trade. That's just me. Like I said, I'm using a 10 pip, 15, 20, 25, 30. I'm going to be honest with y'all. The only time I'm using really a 40 pip trade is if it's a GBP pair, because those move fast, or if it's gold, because I'm trying to give it room to breathe, right? So remember that structure that we looked at, though, that diagram, Right, Hulk smash. So remember that diagram that we looked at? We drew it up. Got price here. They giving you this. They showing you this on purpose, right? Here, then what? They take you out. Price falls. Now you just got to catch the retest. And then they push the market down in the direction that they want to go, right? Just that simple. So all of this is what you got to realize, but also understand higher time frame, right? This could have just been a counter trend. Make sure you start from the daily. I go from the daily on down. Daily, 4 hour, 1 hour, 30 minute, 15. I mess with the 1 minute sometimes, but Trey gonna have to explain it to y'all a little bit more. You know what I'm saying? You gotta be a real sniper to get into all that, right? So now just another pair, another setup that I was looking at throughout the week is, right, top-down analysis. Right here. See, this one was a little easier to spot, right? So that's a buy area that I was looking at. This one is a little easier to spot, and this was on a 15-minute. Like I say, this is all fractal. Especially if you see a trade setup and it looked the same on all time frames, please take that trade, right? But what I'm saying is these type of setups work on any time frame. It could be the 1 minute, 15 minute, 30 minute, don't matter, right? So let me go ahead, hurry up and go over this one. So let's go in replay mode here. So just looking at this structure right here, I'm already in a bullish mindset, right? We can see this is clearly going up in the uptrend, right? So like I said, we were all taught to buy this. Let's just be honest. We was all taught to buy this. So what would have been down here? Stop loss, right? That's where your stop loss would have been. So now let's just go ahead and play it out and see what happened. Look what they did. Before we even got to this, look at how they fooled you. This is that point when we talked about earlier where, oh, I'm in profit, I'm in profit. Well, you probably should have took profit, right? Look at how fast this happens. Look at this large candle. Why do you have this large bank candle right here? Because your stop loss right here. That's how I know for a fact that they are in the market. So now all I got to do is be patient and follow the bank. It's not something that I'm making up on my own. I'm just right, the FU candle. I'm just being patient and I'm following the banks. I'm not doing nothing on my own, honestly. I'm going to follow them. So boom. Now, high went from falling that fast to shooting up that fast, right? Look at these candles. These are large candles, right? So now I know that the banks are for sure in the market. This is a worthy attempt, especially on the 15-minute because your stop loss is not going to be big. Remember the diagram that we just looked at. I'm going to use the brush this time. Y'all excuse me. Up, down, up, down, up. Oh, I'm in profit on the buy, slam down. Price shoots up. What are we looking to catch now? What are we looking for at this point? What are we looking for to get into this trade? Our POI. So me personally, I play off the open and the 50%. So this would have been my snipe zone. Stop loss. From the open, like I said, you can play the body or the wick. So from the open to the body, you'd have been looking at about a 12, 13 pip trade, 11. To the wick, you'd have been looking at about a 25 pip trade, right? So let's play it out and see what happens. Price comes down. You are now entered into the trade. We are talking about a no drawdown at all. Like you probably wouldn't even turn red, right? Now, we got to remember what's going on. At the same time all this is happening, look at the structure that they created for you, right? So what people doing up there? Somebody tell me in the chat what people doing while I set this up. They selling, right? Exactly, they selling. So now we got what's called up there our pocket of money. This is trap money. Oh, that now they up there saying, oh, I'm in profit, right? So like I said, we could go 25 pips, 24, whatever. So now let's look at your target up here. What did we just talk about? Every time we take a trade, at least 1 to 3 risk to reward. Every single time, right? So now let's see if TP got smashed. Let's play it out, see if TP got smashed. Move this over here. Look at price. Look at that healthy price action. It don't look like these candles. Remember, if it's fast, it don't last. When you get out of when you hit your point of interest, you do want it to move fast. But once you move it in the direction that you want it to be up, retrace, up, retrace, up, retrace. You want it to be healthy price action. Over time, TP smashed, right? You just had to be patient. So don't be, another thing I want to go over right quick before I pass it to Trey. Don't be one of those traders, man. Trading is all about psychology. It's 90% psychology, 10% technical. Don't be, once it get close to your TP and it retrace a little bit, you exit the trade. I'm guilty of it myself, right? But look what happened eventually. It kept going. It smashed TP and kept going, right? So like I said, I'm gonna go back to the checklist again real quick before I pass it. Yeah, when they moving it sideways, they designing that for you to look at it and say, oh, it's moving sideways, it's in consolidation. When they get to this point, I want to sell it. When they get to this point, I want to buy it. It's a double bottom, double top, right? Right, Reek. Stop loss, break even, let it rock. Let the trade happen. I never exit, like, I try to never exit out of a trade. Either let it hit stop loss or either let it hit TP or break even, right? So don't be one of these people that just exit out of the trade. You know, get your trading psychology right. Let it hit TP or stop loss, because it's only 2 things gonna happen. You're gonna hit TP and you're gonna make some money, or you're gonna hit stop loss and now you can see what happened. You can go back and back test, right? So I don't know how many of y'all have the Pro Zoom to use this tool right here, but this definitely will take you to another level. Of course, it's not free. I think it's like $14.99 a month, but it's gonna pay for itself. I'm gonna be, my mind has been off when I've been trading. If you are right, Ryan, you gotta keep your emotions in check. If you in a bad state of mind, don't even get on the charts, because you're not gonna see them the way that you need to see them, right? You're not gonna be able to see the market the way you need to see. You're gonna be trading off of emotions. And if you trade off emotions, the minute you lose a trade, you over with. You don't even want to trade no more, right? So pretty much that's pretty much all I got. Let me go back to this real quick. Oh, I deleted it. I think Malik dropped it in the chat, so that's cool. All right. These are the schematics. I went over this the last call that we use. It's pretty much the same thing that we just looked at, those diagrams. Oh, you got your double bottom, take you out, shoot up, you find the spring, the test. Now you move it. Same thing on the sell side. It's everything that we just went over. How I started is marking off the charts just like this, right? And then I got more advanced into it. So other than that, I'm gonna go ahead and find Trey and make him host. That's pretty much all I got. Trey hiding on me. I don't see him. You see him, Malik?
Yeah, he already.
Oh, right here.
Oh, all right, cool. Well, I'm gonna go ahead and stop sharing my screen. Go ahead and take it over, my guy.
So I need first thing first, before we even get started, I need you to drop a 777 in the chat if you got some value from him. But my boys really just went in. Shout out to my guy Ray Vaughn. Like, he did his thing, his thing. Let's get it. So really, one thing before we really get into the charts for real, I'm really gonna show y'all a few things. Actually, like, a lot of people like everybody know we had this currency and crowdfunding event, talking to a few people about smart money. And one thing I really noticed about a lot of people, about like people main problems about like learning smart money, is that they overcomplicate it. Like being overcomplicated is a key thing to like that really clog people's brain when they actually try to learn smart money, because smart money is supposed to be something, but honestly, in my opinion, smart money is one of the most profitable, easiest way to trade, honestly. With the highest reward and the smaller TPs, being honest. But that's just my opinion, though. But hold on, let me actually go to here. Let me share my screen. Right, keeping shit simple. Let me share my screen. Cool. Hold on. Screen 2. Share. Cool. Give me one moment, family. Give me one moment. Ah, shoot. Here you go. All right. So first thing first, a lot of people ask me what is a good like what is the perfect smart money entry? Like literally, what is the perfect smart money entry, right? So my man Rayvon really talked to y'all, really showed y'all how price actually took liquidity. It did all of this other thing. It actually moved and price actually. So like added on to that, I'm gonna actually go down to like how to actually use the field, which is one tool that really helped me out. So once price actually takes liquidity, let me draw it up for you guys. So just like my man Rayvon was saying, the market make these patterns, right? The market sit here making these patterns, making them double top. For example, on the buy side, price actually shoots up, take the liquidity, and then move down, right? But guess what? Like, there's a difference in between predicting the market and flowing with the market. A lot of people, they see different POIs like along the way, like being honest, like how many of y'all have seen POIs like here? Like y'all seen POIs here? Drop a 111 in the chat. We seen multiple POIs, and then price end up blowing through all your blowing through all your stop losses, right? Like literally, you see all the different POIs. You don't really know which one to take, but price is sitting here blowing through all your stop losses. So this is one thing that actually helped me out with every single last smart money trade that I actually take, right? It's actually waiting for price to actually confirm it's want to move. So let me drop this. So after we see how the banks really just came in, controlled the market, manipulate the market, hit stop loss, hit our pocket money. Let me go ahead and draw it out right quick. Right. We have our little pointed inches up. Generally, I take every trade I take is from either the 71 area and up. Like that's literally like I'm not taking a trade unless it's from this area. I don't care no matter what. I literally on every trade I take, I literally draw a box on the 61.8. I make it red, and I make a statement that I'm not gonna take a single trade from this area. It's just I refuse to. Basically, like the reason behind that is like just like Ray Brown was saying, like when you sleep, they move price. But guess what? Like this is what they teach you. Like this is what they teach you to sell from. This is what they teach you to buy from. This is what like literally. This is where literally everybody in the market is selling or buying from. So if everybody in the market is selling or buying from that area, and if 95% of people actually lose inside this market, why would I do what 95% of people are doing? You gotta think about. You gotta think smarter. You gotta think smart and move different, right? Think smart and move different. Hold on, let me check the chat box. I don't know why it's popping up. Let's see. Let's get it. Oh, here you go. Fast. All right. So one thing, like, as far as like confirming price, you gotta realize too. If you in here again, momentum. Right. So say we just steady back and forth, going up, right? Steady going up. We finally break through that price level. Say we have a pointed inches right here, right? The little down movement candle. Up move. Right? Boom. Boom, got our down movement candle and everything. And we looking for price to come back to this area, right? We looking for price to come back to here. This is where the real sauce come into play. This is where really like the even more smaller stop losses, the even more tighter into the bigger risk to reward and everything, right? When you zoom in on these areas, right? So say this your 4 hour or whatever. Say before you sit here and actually get an entry off this candle, you can get confirmation on a trade. So this is what I love to Yo, what's good? Hold on, mute yourself, bro. They do not want me. They do not want me giving out the sauce, bro. That's what it is, bro. Like right when I'm saying I'm finna go in, they do not want me to give out the sauce. So let me get back into it. Appreciate everybody who actually on. Let's get it. We back rocking and rolling. Hold on, let's just share my screen. Share my screen. Share screen. Share. All right, cool. All right, we back lit, family. We back lit. They deleted the whole diagram on me. All right, that's a bit. All right, so bet let's get it. Let's get it. We back and we rolling. All right. So like I was saying earlier, let me draw this bad. They tripping. Wanna cut me off. They don't want me dropping out the sauce for you guys. They don't want y'all giving value. That's what it is. They don't want y'all giving this value. So all right, boom. And when Price finally sit here and take out that money, right? We finally get here and Price sitting here taking out that money in the area. We finally get moved down, right? And Price is just sitting here. Let me have to drop my field ball again. My field from top to the bottom. So like I was saying earlier, I literally on every trade I literally take a red box and put it over the 61 area. Go ahead and make it red. And I'll make sure I won't take a single trade out of this area. It's because I know everybody else is looking there, right? And generally, a lot of trades that I'm looking at are long-term trades for us. So like, we may not see that many signal, like may not see that many trade opportunities, like on like bigger time frame, like really true smart money entry. Like, but as far as that, like that's the beauty in it for real. You don't have to sit here and look for all these entries for real. Seeing here. And we finally get that move to the 88, right? But really, what really give you confirmation, like right now, like this point right here, this is predicting a market right here. At this point, you predicting the market, but guess what? Since the risk to reward is still good, since like literally, since you only like, let me draw it out. Short position. All right, cool. Short position here. Since the risk to reward is still be good, it's still worth taking the trade. Like this is still worth taking every time. And I will take this trade every time. But if you want more confirmation about actually the market itself, like confirmation that the trade is gonna go in your favor type deal, like really before you really take the trade, you can actually zoom into a smaller time frame. So say you have this right here, right? This right here. Let me make that a little bit lighter. Right? I'm actually gonna enlarge this area. So like keep in mind we're right here looking for the sell, right? So keep in mind, like in this box area, in that same box, you're gonna see price action where on a smaller time frame where it looks like this. Price is still making higher highs and higher lows. Price is still making higher highs and higher lows. But literally, as soon as price sit here and breaks, like, hold on, I'm not even gonna tell y'all. Actually, somebody in the chat, let me know what this is right here. What is this? Somebody drop it in the chat for me. Right here. Oh, you My screen on it clear? All right, bet. Somebody in the chat about let me know what this moment when price sit here and goes up and come back down right here in this area. What is this right here? Let me see. It's retest. Right. Pull back. The answer I'm really looking for is the break of structure. So think about this, right? Everything I'm talking about right now is inside this gray box, in this little green box, right in our entry zone. Everything I'm talking about is still up here. So think about this: you got a low, a high, a higher low, a higher high, a higher low, a higher high. Then all of a sudden, on a lower, keep in mind this is all on a lower time frame inside of this area, right? And then all of a sudden you sit here and you have a lower low being formed, right? So that's still a break of structure. So you can literally, on the smaller time frame in this area, like this is the safest entry hit. Like once you price get hit, you'll probably actually go ahead, like that's when price will sit here and actually make that that lower low. But the safest entry is really entering off of this, right? I'm gonna draw all on one chart for y'all so y'all can see more clearly. This is the safest entry to take right here. AKA, that's why I love head and shoulder patterns with smart money. Like that's why I love head and shoulder patterns with smart money, really. Like this is literally the safest entry to take. You know why? Because you move from predicting the market to actually flowing with the market. Right here, we don't know, right? Like being real right now, we don't know if price is gonna sit here and fall back down. Price can literally just keep shooting back up, stop loss hit, and keep going on our day. We move on to the next trade. But with this right here, once you see this price action, it actually moves from you when you take the trade after you see that first break of structure. You actually move from predicting the market to actually flowing with the market, because the market went ahead and gave you clues that, okay, I'm ready to turn around. Okay, I'm ready to go ahead and make that new structure. But since you're on a lower time frame with this, right? You can actually sit here and hold this lower time frame entry to the higher time frame, really, right? And actually, let me show y'all that on the buy side, right? I'm actually gonna draw it up on the buy side for y'all so y'all can actually see it as like that too. And show y'all all of it together. Now, draw the feel about, go to the high for the buy side. Looking for an entry off of the, preferably off of this area. Right. So once you get this confirms that actually price want to go in your favor, right? Price actually is ready to actually turn around, right? So after you get that, you'll get that little move back down to go ahead and create that higher high, right? So honestly, this is the safest. This is like literally my favorite entry way to enter off the market. Draw this up a little bit better for y'all. So like that's your area off of here, but like literally one price break, like since price is fractal, and really once price break on the smaller time frame, your area, you'll just throw the field out again from the low to the high. And you'll look for that same area here, the 88 area, but you're holding all the way up to these higher time frames, right? You're holding all the way up to make the new highs, right? So you're holding all the way up to here for TP as TP1, right? That's just TP1. Actually, let me go ahead and actually show y'all that on the chart. This is why I love this example. It's a really good example of what I'm talking about. Exit this off. Slightly. You have the clear breakup structure right here, right? You have a clear breakup structure, like price was coming down and falling, price came down, snatched some of the low, and then literally went the other direction, right? And first of all, before I even get into this, drop a 101 in the chat if what I just said right here, up here, made sense. If what I said up here and up here made sense to y'all. I want to make sure everybody don't have any questions about what I'm really talking about. Make sure we all on the same page. Cool. All right. All right, cool. Good. Make sure we all on the same page. But this one thing, like, I really want, like, the thing that Rayvon went over, the thing I just went over too, I really want y'all to sit here and master that, really master understanding the higher highs, higher lows. Like, once you master the higher highs and higher lows, like, literally, like, smart money becomes a breeze. So you can, like, literally, that's all it takes. Like, a lot of people don't really take time out to master the basics. They want to jump straight into what the strategy is. Like, what the strategy we gonna use to trade. Like, that's cool and all, but like, make sure you know your fundamentals. Because that's why all the greats are so great, because they learn to actually take time and learn the basics for real. Like, shout out to Kobe, for example. Why is he such a great basketball player? Because he took time out to learn the fundamental, time out to actually learn the basics for real. Like, once you learn the basic, everything will become a breeze for you. So let me get into the example, right? So, like I said, one thing I really like about smart money, once you catch it off these bigger time frames, once you learn how to like play out the different time frames, looking at structure, these are really trades you can really hold for long term and like get multiple re-entries off of every trade. So like Series C, price came down and made a low, right? Everybody, like, if you agree with me that price came down here and made a low, drop a 555 in the chat. Let's make sure everybody understanding, like, looking at structure right here. Like, price came down to make a low, drop a 555 in the chat. All right, cool. From this low, price came up and made a higher high, right? So therefore, it broke structure. Structure is now broken. So from this point on, we can look for structure to look for buys. Like, and it's like, as long as we inside of this range, we looking for buys all over again, back to back, right? Back to back, we should be looking for buys. No matter what price does in this area, we should be looking for buys, right? And once you draw your fib out, right? Let me actually delete this so I can redraw it out for you guys. Once you draw your fib out from the low to the high, you should be looking for that retracement in the 71 and below area, like looking for a retracement back in these areas. We all know, like, once you get into detail, you see the points of interest, the POI, which is that actually that buy to sell, the buy counter that never came back and got checked. Like, look how impulsive this move looked. Like, let's be real. Like, this is retail, this is the banks. It's a bit different between the two. It's a bit different. Look how fast, look how strong price actually moved. And then it actually came up and hit and made a new high. So, like, with that being said, you should actually see as impulse, correction, impulse, correction. Like, identify your impulse, your correction. Look how long it actually took to play out. Look how fast this went up, and look how long it took it to come back down to correct itself, right? And you see, all we did was come back into that little buy to sell, the buy count, interest, and from there, right? So from here, I want y'all to notice, when we got the entry here, we broke structure, right? So price, once again, price was sat here, made another low, right? Price sat here, made another low, and guess what? It came up and broke structure. We got a body to close, because that's what really, like, that's what tell if price really broke structure or not. We had a body to close above the highs, right? It don't matter what the wick do. Like me personally, I measure the bodies, right? The bodies are really what bring out structure. So if price would have came, like, say if the high of this was right here, right? That would not be a break of structure. But since the body did this, it is counted as a break of structure. So from there, when price actually broke structure, it gave me even more confirmation to go ahead and take the trade. And let me get into this. This is actually a lower time frame when you go on a 1 hour. I really want y'all to take time out to really, truly, and back test this. Because even from here, we came price. This wasn't as clear to see, but you'll learn how to play off of it as you move on, like the retracements for real. Let me see here. We go here. Boom, boom, boom. It was on 30 minutes. It was on 30 minutes. Yeah, here we go. So here, one thing I want y'all to notice again, right? It's another thing too. When I have a point of interest, whenever I draw my field out, I draw it from that point of interest all the way up, really. And that's how I really get my point of my points of interest when I'm looking at a specific area. Cause like right here, I want you to see, like, agree with me if this look weird. Like, if this look off to you, like, drop a 77 in the chat if this look off to you, right? I want to make sure, like, we all seeing the same thing, right? Because actually, like, when I'm trading smart money, I give myself 3 L's. Like, if I lose more than 3 times, I'm done trading off the pair. I'm done trading, like, because, like, there are different time frames, everything. I may have multiple points of interest, really. But I look for which one give me the best reaction off of and what the price do in those areas, right? So, like, we had this point of entry marked up, and like I went with this. I had at first I had 3 different points of entry. I had one right here, I had one right here, and I had one here. But what made me pick this one overall was the fact when we came down and actually hit it, guess what? We broke structure. We had a high, a low, and we came and made a higher high. So like immediately off of here, you look for this one a lot more clear, right? The high, this the range of this area. See here and pull back your high. I mean from your low to your high. We got that 7.88 area. We got a last push down that took out liquidity. We got last push down, big move up that was very impulsive. And so that what really made me look at this area like a lot more stronger. Like I was really looking at that when we came up and hit this area and made a new high, right? And from here, since we did that, like we made a high here, like it's like price is giving us every sign we want to go bullish. Literally every sign we do, we want to go bullish, right? But since let me go back to the 4 hour. But since we understood, we came down, made a low here, and came and made a high here, we can confidently hold this trade all the way to the highs. All the way to the highs. And when we actually hold these trades all the way to the highs, like literally, this is how I play it. When you throw your field ball, I actually, the highest price has to go and make a new high. You actually have your TP1 set at the high, your TP2 set at the -27, and TP3, TP4, literally I just set them at the field levels really. Like price can like, those are your extensions. Like when you use the field level, the Fibonacci tool for real, like you expect price to extend into those areas to hit your TPs. And like really when all said and done, all it do is take time. Like really time is what on your side to really like let it play out. Like being honest, like I know for a fact, like most people took their money out when it hit TP1, right? Well, most people took money, I would hit TP1. This is why I really take partial. Like, I know some people do multiple entry, but this is really why I just take partial for real. I have one trade, and each CP I take out 50% of the profits for real, each one. So to 50% of profits here, to 50% of profit here, and then really once your TP get hit, you go ahead and just close out the whole trade. But that's really me managing the trade for real. And then on top of that, like, where is it? I would just want to point this out to everybody. We finally had got into these areas. We actually finally came down to this gap. Let me delete this off so I can see it clearly. We finally came down into this USD CAD gap that we've been looking for the longest. We literally been selling all the way from here to here, from here to here. We've been selling all the way down to the gap. So once price actually builds more structure, because right now, like, literally, price can just keep falling. Price can literally just keep falling if you want to. But we're gonna actually wait for more structure. And guess what? If we break a high, guys, like, hear me out. If we break a high, that means if we sit here and do this, right? If we sit here and we come up here, right? We created a higher low, we give some point of entry, give me some good structure down here, and we get that little here. Best believe when it right here, I will be taking a trade, and I will be hello, wait, on me. The little get it. I will be taking all of this. Like, I will be attacking all of this. Like, I will be attacking all of this. Like, impulse, correction. If we break structures to the other side, I will be holding all the way for the highs. Especially this is like on the DSY, we got liquidity all up here for real. Man, like, literally, like, so really, like, I just wanted y'all to sit here and really go back and, like, I'm gonna send these setups into the chat for us. So I really want y'all to go back and really study the market. What pair was that on? I was on CAD GPY. The computer kind of messed me up, so I really didn't get to draw how I fully wanted to draw it. But I'm gonna clean this up a little bit. I'm gonna drop it in the chat for y'all to actually look at it better and to really just have it with y'all so y'all can use it to y'all advantage. Make sure y'all actually look at the picture, actually applying it to your trading, right? Because, like, right now you got the sauce, you got your note, but it's up to you to actually apply it and to have the right psychology to actually let it play through. And one thing I wanted to say before we get off this call is the fact, like, when you first come into Forex, you hear about Forex, we take you to the academy, right? We take you to the academy, and that's for the basic knowledge, get the lingo, and understand everything, right? Understand, if you want to learn smart money, there is no shape, form, or fashion you cannot learn smart money and not go through that trade house course. That course is a 12-hour course, yes, but it's just like your academy for smart money. It is just like your academy for smart money. And honestly, like, my favorite video that I highly advise everybody to go through and really pay attention to is phase 1, lesson 5, because that Thrive video is one of my favorite videos. It hit, don't it? It go hard, don't it? Yeah. Like, literally, take time out to actually really watch it for real. So with that being said, hope y'all have a good day. I hope y'all got some value. Matter of fact, drop some 777s in the chat if you got some value from my guy, Rayvon. We got some value from me. Make sure everybody really getting some value for real. She. With that being said, see y'all guys later. Let's get it.